Listen closely. Wall Street is telling the exact same seductive lie it told 25 years ago. They've just changed one word. In 1999, the magic word was internet. Today, the magic word is AI. It's a script we have seen before. A revolutionary new technology promises to change the world. A gold rush begins. Every company, whether it makes sense or not, attaches the magic word to its name to send its stock price soaring. And anyone who dares to question the infinite profits of the glorious new future is called a fool who just doesn't get it. We know how that last story ended. It ended in the dot-com crash of 2000, a multi-trillion-dollar wipeout that vaporized thousands of companies and the life savings of millions of investors. It ended in a graveyard of broken dreams, symbolized by a sock puppet. And now, it is happening all over again, in the exact same way, but on a scale that makes the dot-com bubble look like a practice run. This isn't just a sequel, it's the final act of a much larger play. Because this time, the AI bubble isn't being inflated in a healthy economy. It's being pumped up on top of the everything bubble we just talked about, the largest financial delusion in history. What you're about to see is why the coming AI crash won't just be a repeat of 2000. It will be the trigger that brings the entire system down with it. Every great tech bubble follows the same predictable 5-act script. It is a powerful narrative machine that takes a genuine technological breakthrough and twists it into a weapon of mass financial destruction. The script works because it preys on our most powerful emotion, hope for a better future. But it always ends by exploiting our oldest emotion, fear. Here is the blueprint. Act 1, the technological breakthrough. It always starts with something real, a genuine innovation that has the potential to change the world. The birth of the internet, the launch of a powerful AI like ChatGPT. A story is created not just about making money, but about being part of a revolution. A new paradigm is promised. Act 2, the hype cycle and the smart money. Early adopters and venture capitalists, the smart money, pour millions into the new technology. The financial media catches on and starts a relentless hype cycle, broadcasting stories of visionary founders and overnight millionaires. This creates an intense fear of missing out. The narrative becomes, get in now or be left behind forever. Act 3, mass delusion and the abandonment of logic. This is when the public rushes in and the bubble inflates to insane proportions. Traditional ways of valuing a company, like profits and revenue, are declared obsolete. They are replaced with new, meaningless metrics like eyeballs, user growth, or compute power. The only thing that matters is the story. The public buys into companies with zero revenue and billion-dollar valuations, believing the fatal lie, this time is different. The old rules don't apply. Act 4, the great cash out. While the public is dreaming of a glorious new future, the insiders, the founders, the venture capitalists, the early executives, begin to quietly sell. They cash out their stock options, selling their massively overvalued paper to the euphoric crowd. They become billionaires by selling the promise of the future, knowing full well that most of these companies will never turn a real profit. This is the moment the trap is set. Act 5, the reality check. And then, the dream collides with reality. The money runs out. The promised profits never appear. A major company collapses, and the magic spell is broken. The hype turns to doubt, and the doubt turns to panic. The sell-off is brutal and fast. In a matter of months, 90% of the market value can be wiped out. The public is left holding worthless stock, and the new paradigm ends in an old-fashioned crash. To see this script play out, word for word, we only have to rewind the clock by 25 years, to a time when the world was convinced that adding in a .com to your name was a license to print money. In the late 1990s, the world was gripped by a revolutionary new idea, the internet. This was Act 1, the technological breakthrough. For the first time, information, communication, and commerce could happen instantly across the globe. The story was intoxicating. The internet was going to change everything about how we live, work, and shop. And in the long run, that story was true. But in the short run, it was the perfect fuel for a bubble. The venture capitalists of Silicon Valley and the bankers of Wall Street saw the gold rush coming. This was Act 2, the hype cycle. They poured hundreds of billions of dollars into any company with a .com in its name. The Nasdaq, the tech-heavy stock index, went parabolic, doubling in value in a single year. Financial news channels ran stories 24/7 about the new economy and the brilliant young founders who were becoming billionaires before their 30th birthday. The fear of missing out was an epidemic. By 1999, the hype had exploded into Act 3, mass delusion. The old rules of investing were officially dead. Companies were celebrated for how much money they were losing. It was called burning cash to acquire eyeballs. The most famous example was Pets. Converse, it was a company that sold pet food online, losing money on every single sale. Yet, at its peak, it was valued at hundreds of millions of dollars. Why? Because it had a great Super Bowl ad with a sock puppet. That was it. Logic was completely abandoned. People quit their jobs to become day traders, convinced that this digital gold rush would never end. But while the public was buying the sock puppet story, the insiders were getting rich. This was Act 4, the great cash out. Founders and venture capitalists took their worthless companies public in an IPO, selling their shares to a euphoric public that didn't know any better. They walked away with billions in real cash, leaving ordinary investors holding stock in companies that had no customers, no profits, and no hope of ever making money. And then, in March of 2000, came Act 5, the reality check. The money started to run out. A few major dot-com companies missed their already ridiculous earnings targets. The magic spell was broken. The panic was breathtakingly fast. The NASDAQ index, which had peaked above 5,000, crashed by nearly 80%. Over $5 trillion of investor wealth was vaporized. Pets, Com, Webvan, GeoCities, hundreds of companies that were supposed to define the future went bankrupt. The public, who had bought in at the peak of the hype, was financially ruined. The dot-com crash was a brutal lesson. It proved that even a world-changing technology can be used to fuel a devastating bubble. A lesson that has been completely and utterly forgotten because of the exact same script is playing out right now, but the magic word has changed from internet to AI. Now, look at the world around you in current year, and tell me if this sounds familiar. The script hasn't just been dusted off, it's being followed word for word, but with bigger numbers and faster computers. Act 1. The technological breakthrough? It happened in late 2022 with the public release of ChatGPT. Overnight, the world saw the power of large language models. A genuine world-changing innovation was unleashed. And the story was born, AI will change everything. Act 2, the hype cycle? It began instantly. Microsoft poured $10 billion into OpenAI. Venture capitalists, terrified of being left behind, started a frantic funding race, throwing billions at any startup with AI in its pitch deck. And the financial media has been relentless. The star of the show is Nvidia, a brilliant company that makes the computer chips essential for AI. Its stock has become the poster child of the boom, soaring to a multi-trillion-dollar valuation, adding hundreds of billions in value in a single day. The FOMO is now an institutional imperative, which has already pushed us deep into Act 3, mass delusion. The old rules are gone again. We are valuing AI companies not on their profits, but on a new abstract metric, compute power. We have companies raising billions of dollars before they even have a product, based purely on the promise of creating a godlike AI. The mania is so intense that any company that simply mentions the word AI in an earnings call sees its stock price jump. The public is piling in, chasing the new gold rush, convinced that this time it's truly different. But while the public is chasing the AI dream, what are the insiders doing? We are in Act 4, the great cash out. The evidence is right in front of us. Corporate insiders at major tech companies are selling their own stock at the fastest rate in years. Jeff Bezos sells $1 billion of Amazon stock. Mark Zuckerberg sells $500 million of Meta. They know that these sky-high valuations are not sustainable. They are using the public's euphoria as the perfect opportunity to convert their paper wealth into real, hard cash. Do you see the pattern? A genuine breakthrough, followed by a media-fueled hype cycle, leading to mass delusion where profits don't matter, all while the insiders quietly cash out at the top. The first 4 acts of the play are complete. The script has been followed perfectly. This means there is only one act left, the reality check. And the only question is, what will be the trigger that brings the curtain down? So, the stage is set for a repeat of the 2000 crash. But this is where the story gets even darker. Because the AI bubble isn't just a sequel to the dot-com bubble, it is far more dangerous for 3 critical reasons. First, the sheer scale is incomparable. The dot-com bubble, at its peak, was worth around $3 trillion. The AI bubble is already multiples of that, and it is being inflated on top of the everything bubble, a global financial system already stretched to its breaking point by over a decade of free money. When the dot-com bubble burst, it triggered a recession. When the AI bubble bursts, it could trigger a systemic collapse. Second, the AI story has a fatal flaw that the internet didn't have, the astronomical cost of reality. The internet was built on code, which is cheap to replicate. AI is built on 2 things that are incredibly expensive: massive computing power and gigantic amounts of electricity. We are already seeing reports that by 2027, the AI industry could consume as much electricity as a country the size of Sweden. These models cost billions to train and run. This isn't a world of infinite, cheap growth. It's a world of intense physical world constraints. The profits the market is expecting may be physically impossible to generate. And third, this time, the bubble is concentrated in a handful of giant companies. In 1999, the risk was spread out over thousands of small, unprofitable startups. Today, the fate of the entire stock market hangs on the performance of just a few tech titans like Nvidia, Microsoft, and Google. They have become so massive that they are now the pillars holding up the entire market. If one of them stumbles, they could bring the whole structure down with them. So, while the pattern is the same, the risk is magnified. We are not just rerunning an old script. We are performing it on a much bigger stage, with much weaker foundations, and a much, much longer way to fall. The reality check is coming. It won't be triggered by a lack of belief in AI's potential. It will be triggered by the cold, hard math of impossible valuations, unsustainable costs, and a global economy that is already on the brink. Let's be absolutely clear. This is not an attack on artificial intelligence. AI is a genuinely revolutionary technology, just like the internet was. It will change our world in profound ways, creating incredible breakthroughs in science, medicine, and productivity. But a world-changing technology and a sustainable investment are two completely different things. The internet did change the world, but that didn't save the investors who bought pets, calm at the peak of the hype. The public was right about the future, but they were tragically wrong about the price they paid to be a part of it. The AI bubble is the same trap. It has taken a real technological promise and transformed it into a dangerous financial casino. The goal is no longer to build sustainable businesses that use AI to create real value. The goal is to get rich from the hype itself, and then get out before the public realizes the dream was sold at an impossible price. Surviving the coming AI winter isn't about rejecting the technology. It's about separating the hype from the reality. It's about understanding the difference between a company with a good story and a company with a good balance sheet. It's about recognizing the 5-act play as it's happening, so you can be a spectator, not a victim. The insiders are already cashing out. The reality check is coming. And for those who are unprepared, the financial pain will be immense. But for those who understand the pattern, the bursting of the AI bubble will be a moment of clarity, a chance to invest in the real value that emerges from the wreckage long after the hype has died down. The story of the AI bubble is unfolding right now, in real time. To follow this story and to understand the other patterns that are shaping our financial future, subscribe to our channel. We will continue to track the evidence, follow the script, and give you the historical perspective you won't find anywhere else. Don't get trapped in the hype. Understand the pattern.